Hello and welcome to today's edition of The Exchange. We're live on the floor of the New York Stock Exchange with Magnus Cattan. He is the head of ICE Data Services for Asia Pacific. Magnus, thanks for joining us today.
Thank you, Doug. Thanks for having me in this iconic building, the home of ETFs.
We're here at the home of ETFs, and we're going to talk ETFs. I want to talk a little bit about Asia Pacific, right? Your ETF industry has seen record growth in recent years. How big is the ETF market? What are we seeing? And what's really driving this growth trend?
Sure. So, Doug, I was thinking about it. You know, when we met for the first time about 10 plus years ago, it's fair to say that ETFs in Asia Pacific were in their infancy, right? But if you look at it now, Asia Pacific ETF AUM is at $1.1 trillion. At the same time, though, Europe's at 1.8 trillion. The US is at 8.1 trillion. So there's still quite a lot of runway there for growth within the ETF community in Asia Pacific. What we've also seen is about 500 to 700 million US dollars of Asia money has been going into US and European ETF listings as well. So we're seeing this other trend of fund of funds coming into Asia in markets like Thailand, Korea, Japan, and Australia as well. The biggest market by far is Taiwan, right? Taiwan has seen a growth in the 227 products that are listed in Taiwan. There's been a growth of about 32%. When you look at that compared to other markets in Asia, which have been growing between 25 and 30%, you can see that growth is higher. But if I compare it to, say, the next biggest growth region, which is Europe, that's 18%. So you can see the kind of the growth trajectory that we're seeing in these markets like Taiwan as well. Without a doubt, fixed income ETFs have been seeing the most amount of growth. And I think what's really seen as a big difference is that transformation in Asia Pacific of the investor base, right? It used to be all about institutional money. It's now a lot more retail money that's going in. Why? Because asset managers in Asia, particularly in countries like Taiwan and Korea, have been spending a tremendous amount of money educating that retail investor base.
Yeah, and it's interesting you talk, I mean, some of the themes are the same here, right? We look at last year, 600 billion in the US went into ETFs, about a third into fixed income. But I think about your role, and you've got this team, you're all around Asia Pac, you're in market in all these different countries. I know ICE Data Services, you have over 6,000 indexes now covering equities, fixed income, commodities, right? Currencies. I think the latest numbers, you're pushing 2 trillion now in benchmarked assets to ICE Data Services. Where are you seeing interest? You know, when your clients are reaching out, does it differ country by country? What are people coming to you and saying, hey, this is something we want to wrap into an ETF?
Sure. So if I look at 2023, the AUM tracking the indices from ICE in Asia Pacific grew by about just over 5 billion US dollars. That's about 25% growth. Most of that growth, though, really came out of the Taiwanese market, particularly in fixed income. So we saw at the start of the year, there was a lot of interest in treasury products, right, across the duration curve. What we started to see towards the end of the year in 2023 was also an interest into investment-grade corporate bond ETFs as well. So that was a bit of a shift from treasuries to investment-grade corporates. At the same time, really, US tech has been top of mind for a lot of investors, right? So the NYSE FANG Plus Index, we saw growth in Korea, Japan, and Taiwan as well. So US tech has been a growth engine for the ETF community in Asia Pacific as well.
So clients are coming to you, right, asset managers, and they're saying, hey, Magnus, I either have an idea or I need some good ideas. Are there particular strategies right now that in 2024 that you're speaking with asset managers about?
Yeah, sure. I'd say there's a couple of themes there, right? So on the equities front, definitely Japanese equities are top of mind, right? And I think that's a global thing. It's not just in Asia Pacific. Japan equities have done very well, and we're seeing a lot of interest in Japanese equity space. As I mentioned before, US tech, for sure. The other one, as I said, is fixed income. And I think what's interesting about that fixed income space is that shift towards investment-grade corporates. We're starting to see interest now into high yield as well. And it's not just about Taiwan, right? So it's also Korea, Japan, and Australia. You know, in markets like Japan and Australia, we've seen not just the local players, but a lot of the institutional players that have come into that marketplace. Firms like BlackRock have listed products on the US Treasury side, tracking ICE indices in both Japan and also in Australia. I think on the flip side, though, what we'll probably see less interest in is, given the economic side of things and the geopolitical tensions, is definitely around Chinese equity and Chinese bonds as well. So it's not all growth. There's an interest in fixed income, investment grade corporates through to high yield equities, particularly Japanese equities, US tech, but maybe a little bit less interest on the Chinese bonds and equities as well.
Okay, here we are. It's 2024. Take out that crystal ball of yours. Are there particular trends, anything going on in the ETF space that you're watching this year?
Yeah, I think I'd put it down to two things, right? And I've sort of mentioned it a couple of times already. Fixed income is going to continue being top of mind for investors in Asia Pacific. I think what we haven't seen yet, though, is we've seen that shift to investment grade corporates. I'll call out like one ETF at the end of last year, the Capital BBB ESG ETF. Now, this was a 20-year plus ESG ETF. This ETF broke records in Taiwan. It was on the day of listing, it was fully subscribed by retail, right? So it wasn't institutional money, it was retail money that went into that. So there's clearly a lot of demand for fixed income at that lower end of investment grade. I think fixed income, as I said, it's going to be an asset class to continue watching in 2024. And I think probably high yield is going to be coming as part of that as well. The second one, without doubt, is US equities. US equities have been popular, the NYSE FANG Plus Index, as I mentioned earlier, but I think we'll see more of that in 2024.
So if you're an asset manager, you're out there, you're listening in, you could be either here in the US or somewhere global. I mean, your team is spread out, you're in market, so you're seeing all these strategies firsthand. Someone who wants to come and talk to you, pick your brain, think about building a new index for them, using something your team's created. How do they get in touch with you? Where do they go?
So they can get in touch with me directly at magnus.cattan@ice.com. I'm happy to get connected with anyone in the industry as well.
Okay, or of course, reach into my team or me through LinkedIn, and we'd love to have a chat. Again, thank you, Magnus, for being here. Thanks for coming in from Asia Pacific. I'm Doug Yones, live from the floor of the New York Stock Exchange, the home of ETFs.